It's your boy Crypto Trapper with another video today. But hope everyone is good, or hope everyone's family is blessed. 2023. This article came out 2 months ago. In this video, we're gonna be talking about this article. I'm gonna be showing a couple other bits. I'm gonna show another, and I'm gonna show a video as well. For my reasoning, or my thoughts. But let's get into this. So Ripple CEO is interested in acquiring some companies in FTX group. So let's get into this. Ripple CEO Brad Gardenhouse is interested in acquiring the parts that service business customers as well as its stake in other companies. For those who don't know, FTX, they actually own a company called Ledger. They actually acquired it, sorry, called Ledger X, what does derivatives and has a license or has licenses to actually facilitate those. So, of course, Ripple in payments and that just boosting their their grip, not only because they got the lawsuit with the SEC, but it will definitely just look good on paper and other institutional investors. But let's continue. Ripple CEO Brad Garlinghouse is reportedly interested in acquiring companies in FTX Group. According to the news, Brad Garlinghouse received a call from former crypto exchange FTX CEO Bankman-Fried just days before the company filed for Chapter 11 bankruptcy. Where they said days in other articles, it was 2 days before he filed for Chapter 11 bankruptcy. But let me continue. The report noted, get rid of that. The report noted that Bankman Fried called Brad Gardenhouse asking if he would be interested in acquiring companies in FTX Group, as the former FTX CEO sought to round up investors to rescue his business. Now that's very important. As we know, Ripple, they deal with payments. You know what the for those who know, obviously you know what they're trying to establish. So I think it would be a perfect fit if Ripple, XRP, or Ripple could acquire Ledger X, and we're gonna in the article is gonna show more companies what FTX own, but if they can acquire that and get the derivatives licensing and that, man, it's like it's destiny, man. Ledger X, XRP it's crazy, man. But let's continue. The Sunday Times highlighted that Brad Garlinghouse claimed that he would be interested in acquiring the parts that service business customers as well as stakes in other companies. As you can see, it's all highlighted the key bits. So in acquiring the parts that service business customers as well as stakes in other companies, institutional investors, the big, the established entities. But let's continue. Regarding the conversation, Ripple CEO Brad Garlinghouse added, "Part of my conversation was if he needs liquidity, maybe there's businesses that he's bought or has that we would want to own. Would we have bought some of those from him? I definitely think that was on the table." In the interview, Gardenhouse admitted the FTX filing for Chapter 11 bankruptcy in the United States complicates the situation, stating that the acquisition would be very difficult, that it would have been one to one, would have been if it was one to one on a one-to-one basis. Ripple CEO highlighted that although the company is keen to explore its options in acquiring some companies in FTX Group, it's a hard path to transact because of the current climate, what's going on right now. The Chapter 11 bankruptcy process was stated for FTX USA Alamo Research and around 130 companies in FTX group. However, the preceding excludes companies like Ledger X, what I was talking about before, FTX Digital Markets, FTX Australia, FTX Express Pay, FTX Capital Markets, and Enabling Technology Inc. and Clearing. So the one what I'm talking about in particular is the Ledger X. What's got the license to derivatives market. Well, basically, Sam Bankman-Fried was basically trying to put the derivatives market on blockchain, and if Ripple can acquire that with what they're trying to achieve and what they're trying to do, it just strengthen their position, in my personal opinion. But let's continue. In other FTX related news, so yeah, that's the end of the article then. Yeah, that's the end of the article. Let me just confirm. Yes, that is the end of the article. Yeah. So I'm gonna be adding a bit more information. I'm gonna be putting the Ledger X website. I'm gonna put a video in this. I'm gonna put a video in this, basically explaining what Ledger X is and whatnot. But yeah. We're a crypto trapper. I had to pause the video to basically, I never had the tab open, so I had to quickly sort that out. But yeah, this is Ledger X. I was talking about it. I'm gonna briefly just scroll down quickly just to show you something. Then I'm gonna go on about so we find out more information about it. So as you can see, build your own portfolio, whatnot. Then audited financial controls, federally licensed and regulated. So as I was talking before, they've got the license. They're federally regulated. They're not. Yes, the FTX own it. They've acquired it, but it's not in. It's not involved in the bankruptcy situation. So let's go to. We're gonna go to. Let's say go company. So it's gonna give us a little brief on what they do. So let's get into this. So Ledger X is a digital currency feature and options exchange and clearinghouse regulated by the U.S. Commodity Futures Trading Commission. Ledger X is available to both retail and institutional investors 24/7 and offers physical settlements for all contracts, block trading, and algorithmic trading opportunities for institutional investors and direct access for all traders since launch in 2017. Ledger X has cleared over 10 million options on swap contracts. Ledger X pioneered the Bitcoin mini contracts in the US. Our mini contracts have an underlying notion of 0.01 BTC and our DESI contracts have an underlying of 0.10 ETH, enabling Galantor trading and ensuring market scalability as Bitcoin prices trend upwards. Regulation. Ledger X holds the following CFTC regulations. This is so important, guys. So let me get into this. So designed contract market, derivative clearing organization, swap execution facility. So guys, I have to pause it quickly. So again, let's get into this. So a derivatives clearing organization, DCO, is an entity that enables each party to an agreement, contract, or transaction to substitute through novation or otherwise a credit of the DCO for the credit of the parties arranges or provides on a mutual basis for settlement or netting of obligation. So let's click. This is the official website. Guys, there's so basically, I'm not gonna make this video way too long, but in short, there's 17 steps you have to you have to do to get this license. Again, I don't want to make it too long. I want to put this link in the description box for you guys. Um, yeah, one sec. Yeah, so I just want to make before I end the video, not even the end the video, sorry, but I want to show you this as well. What what derivatives market's about. So the gross market value of the outstanding derivatives some of them possess and negative values surged from 12.4 trillion at the end of 2021 to 18.3 trillion at the end of 2022, and right now we're in 2023. So just to give you a little insight, guys, what this is all about.
Including Ledger X. Joining us now with more is CoinDesk Gold Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. So, Nick, happy Friday. It appears that FTX is on a fire sale. What can you tell us?
Good morning. Yeah. So last night, FTX filed, basically petitioned a judge to allow it to sell off 4 of its units, including Ledger X, FTX Japan, FTX Europe, and Embed. Basically saying, these units are solvent, they're, operating, they're fine, they're independent, there was, no commingling of funds, they were segregated, and saying that, if it's able to do so, it can, generate some revenue by selling these companies, and more importantly, if they can sell them quickly, they can maximize the value. Right now, these companies had some of their operating licenses paused, or, they're basically talking to regulators, and they want to make sure that they can sell them quickly before these license pauses or operating pauses become permanent and, tank the value basically.
But there are other problems too. I mean, it's also coming in at a time when you have fewer buyers than you would have, let's say, a few months ago. And you also, it's a fire sale. I mean, there are very few bidders on this stuff institutionally. So this is a fire sale, but they said there are a few bids, correct? I mean, but it's probably not going to be as many as there
over
were.
100 actually, which is a little interesting. Yeah, I mean, but it's like the way they're proposing it is they're saying, let's set up an auction. We want to, allow anyone to bid on this. In the filing yesterday, they claimed dozens, and dozens turned out to be about 111. So it's unclear whether or not all of these are serious bids. It's very possible that
I'll pay $1.
Yeah, it's very possible that someone came up to them and said, "Hey, I'll give you $1 for Ledger X," and they said, "Okay, well, this is one of the many dozens of bids that we got." But it does suggest that there's at least some interest in buying these units. I think possibly because they have regulatory licenses, which is something obviously crypto companies have long wanted, and it's a process to get them. So, for example, Ledger X can offer derivatives, FTX Japan can operate in Japan, so it makes sense that there's going to be some interest in buying these companies. And the timeline that FTX proposed basically ranges from January through March for the overall process of, putting them up for auction, letting companies bid, saying, okay, well, we're going to do some due diligence. We're going to make sure you have the money. There was a clause that was very clear about making sure that they have the ability to buy the, units. You knew that they would want to make sure they have the money that they have or that they claim. So there is a process, and FTX is really, it sounds like they're just hoping to be able to sell these units off, and basically no longer have to worry about having extra units that are still operating, and B, generate some revenue for the bankruptcy estate.
Nick, do you have a sense of what the timeline is for this? What is the process, and how long will it take?
The proposed timeline that they said basically is just a couple of months. If approved, then this whole thing will start next month, and it sounds like it could be completed by the end of March. So it wouldn't take all that long. Of course, there's going to be a lot of complicating factors along the way. They're going to have to, first off, a judge is going to have to sign off on this, and then after bids happen, the auction happens, a judge is going to have to hold a hearing just to make sure that everything is squared away. So there will be, some delays and some, effort going into all the due diligence and just the various processes. But it is still a pretty rapid timeline. And 3 months is nothing. We've had no bankruptcy so far has been resolved in that much time or that little time.